Do you want to build a 700 plus credit score in 2024? If so, you're in the right place. A strong credit score, specifically one that's above 700, is like holding a golden key to your financial freedom. It's more than just a number. It's a testament to your financial discipline and reliability. It opens up a world of opportunities, making it easier for you to get approval for loans, credit cards, and even that dream apartment you've been eyeing. Lower interest rates? They're yours with a 700 plus credit score. Better insurance premiums? You've got it. It's your ticket to smooth sailing in the often turbulent seas of personal finance. So, why should you care about improving your credit score? Because it's not just about getting access to more money, it's about securing better financial opportunities for yourself and getting peace of mind. Ready to get started on your journey to a 700 plus credit score? Let's dive in. Before we dive into how to build a credit score, let's first understand what a credit score is. A credit score, simply put, is a numerical representation of your creditworthiness. It's a 3-digit number that lenders use to evaluate the risk they take when lending you money. It's like your financial report card, with scores ranging from 300 to 850. The higher the score, the better your creditworthiness. But why is it important? Well, a good credit score can open up a world of financial opportunities for you. It can help you secure loans at lower interest rates, get approved for credit cards, and even influence your ability to rent an apartment or land a job. So, yes, those 3 digits carry a lot of weight. Now, let's talk about how this score is calculated. Credit scores are determined by a variety of factors, each carrying a different weight. First up is your payment history, which makes up about 35% of your score. This includes whether you've paid past credit accounts on time. So those late payments, they can really ding your score. Next is your credit utilization ratio, accounting for nearly 30% of your score. This is the amount of credit you're using compared to your total credit limit. The lower this ratio, the better for your score. Length of credit history is another factor, making up about 15%. This considers the age of your oldest credit account, the age of your newest one, and an average of all your accounts. Your credit mix, or the types of credit you have, accounts for 10%. This includes credit cards, retail accounts, installment loans, finance company accounts, and mortgage loans. Lastly, new credit, which makes up the final 10%, looks at how many new accounts you've opened and recent inquiries from lenders. Now that we understand what a credit score is, let's look at how to improve it. One of the most important steps in building a 700 plus credit score is paying your bills on time. This is not just a piece of advice, but a fundamental rule in the world of credit. Why is this so crucial, you ask? Well, your payment history makes up a hefty portion of your credit score, about 35% to be precise. This means that each payment you make on time contributes significantly to improving your credit score. Conversely, every missed or late payment can negatively impact your score. Now, life can get busy and it's easy to forget a due date here and there. But remember, your credit score won't forget. So it's essential to have strategies in place that ensure your bills are paid promptly every single time. One such strategy is setting up automatic payments. Most service providers, be it your electricity company, phone service, or credit card issuer, offer the option to automate your payments. This way, the due amount is automatically deducted from your bank account each month. And voila, you never have to worry about missing a payment again. But what if automatic payments aren't your cup of tea? Well, there's a solution for you too. You can set up reminders. These could be calendar reminders on your phone or email alerts from your service providers. Some even offer text message alerts. Choose what works best for you and stick with it. But what's most important here is consistency. Paying your bills on time once or twice won't magically boost your credit score to the desired 700. It's about creating a pattern of on-time payments, showing your lenders that you're reliable and can be trusted with credit. So, make it a habit to pay every bill on time, every time. It might seem like a small thing, but it's these small habits that eventually add up and make a big difference in your credit score. Remember, every on-time payment is a step towards a better credit score. So let's make those steps count. Scene script. Another key factor in improving your credit score is reducing your credit card balances. Let's dive right in with the concept of credit utilization. This term might sound complex, but it's really quite simple. Credit utilization refers to how much of your available credit you're actually using. It's a ratio, and it has a significant impact on your credit score. The lower your credit utilization, the better it is for your credit score. Ideally, you want to keep this ratio under 30%. That means if you have a credit limit of $10,000, you should aim to carry a balance of no more than $3,000. So, how do you go about reducing your credit card balances? Well, a good start is paying more than the minimum payment each month. While making the minimum payment will keep you in good standing with your credit card company, it won't do much to chip away at your balance. By paying more than the minimum, you can reduce your balance faster and decrease your credit utilization. Another strategy is to avoid unnecessary expenses. This might sound obvious, but it's surprising how many people overlook this. Before you make a purchase, ask yourself if it's a need or a want. If it's not essential, consider skipping it. This will not only help you save money, but also keep your credit card balance in check. And then there's the option of transferring balances to lower interest cards. This can be a smart move if you have high interest credit card debt. By transferring your balance to a card with a lower interest rate, you can save on interest charges and pay off your debt faster. But remember, this strategy only works if you stop using the high-interest card and focus on paying off the transferred balance. Lowering your credit card balances can significantly boost your credit score. It's not an overnight fix, but with consistent effort and smart financial decisions, you can reduce your balances, improve your credit utilization, and build a strong credit score. Managing your credit responsibly is crucial to building a 700+ credit score. Now, what does it mean to manage credit responsibly? Let's delve into it. One of the key factors that influence your credit score is the number of new credit accounts you open. It may be tempting to open multiple accounts, especially when deals or promotions are being offered. But here's the catch. Opening too many new accounts at once can negatively impact your credit score. It's because credit bureaus may interpret this as a sign of financial stress, and it could lower your average account age, a factor in credit scoring. So, it's better to pace yourself and apply for new credit only as needed. Now let's talk about old accounts. You might think that closing an old credit card account could be a good thing. After all, it's one less account to worry about, right? Well, not exactly. Keeping old accounts open, especially those with good payment history, can increase the length of your credit history, which is a positive factor in your credit score. Just remember, the longer your credit history, the better it is for your score. Lastly, let's discuss the importance of maintaining a diverse mix of credit. A healthy credit profile includes a blend of different types of credit, such as credit cards, retail accounts, installment loans, finance company accounts, and mortgage loans. Having a variety of credit shows lenders that you can handle different types of debt responsibly. Just remember, it's not about having one of each, but rather demonstrating responsible management of the different types of credit you do have. Responsible credit management is a long-term commitment, but it's well worth the effort. The journey to building a 700+ credit score isn't a sprint, it's a marathon. It requires consistency, patience, and responsible financial behaviors. But remember, the reward of a high credit score is worth every bit of effort you put into it. So let's keep going, and let's keep growing. Regularly checking your credit report is an important part of improving your credit score. It's like a financial health checkup that you can't afford to skip. So, how do you go about getting these reports? Well, you have the right to a free credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, once every 12 months. You can request these through the website annualcreditreport.com, the only authorized site for free credit reports. Once you've got your report, what should you be looking for? First, you want to check for accuracy. This includes personal information, account statuses, credit limits, and payment histories. If you spot any discrepancies, it's essential to dispute them as soon as possible. An error on your report could be unfairly dragging down your credit score. Secondly, be alert for signs of identity theft. This could be accounts you didn't open, unfamiliar credit inquiries, or balances that don't match your records. If you come across anything suspicious, it's crucial to report it immediately. Now let's delve a little deeper into the process of disputing errors. If you find inaccuracies, you should first contact the credit bureau that produced the report. Write a letter detailing the errors and provide any supporting documentation. The bureau generally has 30 days to investigate your claim. If they agree there's an error, they'll fix it. If not, you'll need to contact the creditor directly. Remember, your credit report is a reflection of your financial behavior. It's a snapshot that lenders use to assess your creditworthiness. Therefore, it's crucial to keep it as accurate as possible. In between those free annual reports, consider using credit monitoring services. They can alert you to changes in your credit report, helping you catch any issues much sooner. By regularly checking your credit report, you can ensure your credit score is an accurate reflection of your financial behavior. So don't neglect this vital step in your journey to a 700 plus credit score. It's your financial reputation on the line after all. Building a 700 plus credit score doesn't happen overnight. It requires consistent positive financial behavior. Just as Rome wasn't built in a day, neither is a strong credit score. The steps we've discussed throughout this video, paying your bills on time, reducing credit card balances, managing credit responsibly, and regularly checking your credit reports, are not one-time actions. They are habits that need to be cultivated and maintained. This journey may seem overwhelming at first, but remember, every step you take towards improving your credit score is a step towards financial freedom. Each on-time payment, each dollar paid off your credit card balance, each responsible credit decision, and each error you identify and rectify in your credit report takes you closer to your goal. Consistency is the key. It's the small day-to-day decisions that build a 700-plus credit score. With time and dedication, you can build a 700-plus credit score in 2024. Start your journey today.